Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So 2023 is in the books, and from my perspective, I think one of the big memories for the year and what it will be remembered by is the Magnificent Seven, those seven stocks in large cap tech area of the US equity market that outperformed pretty much everything else during the calendar year. Also, strong outperformance by that large cap area of the market for pretty much the entire year. But if we look back just to October 27th, it wasn't a pretty picture, especially for US small caps, but the fortunes changed dramatically in November and December, greatly related to that sharp decline in interest rates to end the year. And finally, it's Q4 is over, it's in the books. We won't get the official GDP numbers out, but if you look at the Atlanta GDP Now statistics from the Atlanta Fed, it's pretty clear we are not near a recession at this point. All right, so look at this chart here. We have three different lines on the chart. The teal at the top that jumps out above everything else, up approximately 107% for 2023. That's the market cap weighted Magnificent Seven. Those are the stocks that are on the screen there. You see them. You've got all the big names: Apple, Amazon, Alphabet, Nvidia, Microsoft, Tesla, right? These are a lot of the big cap tech names, a lot of the revolutionary technology, even part of it driven by the AI revolution in 2023, another theme from the past year. And that really bolstered the performance of the S&P 500 market cap. Remember, the market cap index for the S&P 500, that's the traditional index where larger companies have a larger contribution toward the gain. And that's why you see such a significant difference between the S&P 500 market cap index there in the dark gray and the Russell 2000 in the green. That's your US small cap index. And by the way, if you compare the equal weight to the market cap, largest difference between S&P 500 market cap and equal weight index since 1998. So it was a very narrow market overall for equity markets over the past year. But it would have been really bad had the year ended on October 27th. It seems like a century ago at this point with all that's happened, but with improving inflation data, comments by the Fed, right? Continued lack of concern about a near-term recession, and the market pricing in the expectation that the Fed's going to cut rates soon, we saw a significant change in the market on October 27th. So let me walk you through this on the chart here. We've got those same indexes that we just talked about, the S&P 500 and the Russell 2000 index. In the teal, we have between the beginning of the year up through October 27th. Why that date? That is the date that the market bottomed in a near-term decline. And oh, by the way, on that date, the Russell 2000 small caps made a new multi-year low, lowest level since November in 2020. It seems like a lifetime ago, but the market was not doing good. The S&P 500, pretty decent for the year, up 8.6%. Small caps are actually down nearly 6%, nearly 10 months through this year. But something happened in November and December that, thank goodness for these 2 months, because fortunes changed dramatically. We can see from October 27th through the end of the year, the S&P 500 was up 16.2%. The Russell 2000 index was up 24.3%. So small caps led, the equity markets rallied. Why? Big reason why interest rates plummeted to end the year. You saw the 10-year move more than 100 basis points down in under 50 trading days. Really massive decline in interest rates. We saw the market start to price in that the Fed was going to become very accommodative and would cut multiple times next year, given the fact that interest rates are going so much lower. We saw small caps and some of these smaller companies that have been negatively impacted by higher interest rates. Really, their fortunes changed and participants started to reward these small cap and riskier parts of the market during November and December, and made up for much or all of the underperformance during the first 10 months of the year. Now, talking about the US economy, we are not in a recession, right? US economic data is still showing no recession. Up on the screen, we've got the 6 ingredients from the National Bureau of Economic Research. These are the 6 primary drivers, big themes from these: labor market, consumer spending, industrial production. You can see industrial production, the only one that's down over the past 6 months. But you look at those first 3, all related to the labor market, from the first 3 from the left side, and then you've got real consumer spending and retail sales and wholesale sales. Both of those retail consumer related. Consumer, remember, 70% of the overall economy and GDP. So labor market tied to consumer spending, still very strong. Consumer spending going up, but we are behind the scenes seeing a pickup in consumer debt. So that's going to be something to watch as the year starts. But right now, people are still spending. People still have jobs. You look at the Atlanta GDP Now forecast, which is sort of a real-time GDP forecast model. It's assessing an estimate, right? We'll get the real figures here in several weeks, but an estimate for the fourth quarter of plus 2.5%. Folks, that is not a recession. That's a healthy growth in the fourth quarter. So not near a recession yet as we enter 2024, the time when a slowdown is expected. But what else will 2024 bring? It's somewhat of an inflection point for a lot of different parts of the market. But if we shift out of the stock markets for a moment and look to the political realm, big election year, not just for the US, but globally. More than 60 countries with more than 4 billion people. You can see India, the largest number of voters, of just north of 1.4 billion people, very large country, emerging market there in India, set for elections in 2024. That means roughly half of the global population is going to the polls, forecasted to be the largest global election year in human history. So perhaps a lot of changes and political changes and impacts next year. So something to watch from the political perspective, not just in the US, but globally. With that, I want to thank everyone for watching, and I'll see you next time.